Welcome to The Explainer. Today, we're diving into something huge that's happening just under the surface, a quiet financial revolution. We're talking about how the world's wealthiest people are pulling their money out of the one place they've trusted for a century, the big banks.
So the big question is, why? Why is this happening now? This isn't just a few rich people changing their minds. It's a massive shift. And it all started when the system we all rely on began to show some serious cracks.
Okay, so before we get into where all this money is going, we first have to understand why it's leaving. And really, it all boils down to one simple, incredibly powerful word: trust. Or, the loss of it.
For the longest time, we all thought of banks as these impenetrable fortresses for our money, right? But in 2023, that whole idea just shattered for a lot of people. Silicon Valley Bank, a major, trusted institution, completely imploded in just 48 hours. That event was a massive shockwave. It was a brutal reminder that, hey, no bank is too big to fail, and your money might not be as safe as you think it is.
But listen, it's not just about the fear of a bank suddenly going under. There's another threat, one that's a lot slower and sneakier, and it affects every single one of us. It's a simple but painful mathematical reality that the wealthy are absolutely refusing to ignore.
This slide, well, it lays out some pretty brutal math. On one hand, you've got the banks paying you next to nothing in interest. We're talking less than 1%. On the other hand, you've got high inflation, which means the cost of everything is going up. So what's the result? Any money you have just sitting in a savings account is effectively shrinking. It's losing its buying power year after year. So, okay, the trust is gone, and the math just doesn't add up. If the world's wealthiest are pulling their cash out of traditional banks, where exactly is all this capital going? Well, the answer reveals a whole new financial landscape opening up. And no, they're not just stuffing cash under the mattress. This money is moving into 4 key areas. They're investing directly into new companies through private equity and venture capital. They're buying up tangible things like real estate and gold. They're exploring the world of digital assets in crypto, and they're spreading their funds across the globe. It's all about gaining more control, more privacy, and finding more growth. This quote right here perfectly captures the new mindset. It's a fundamental shift in thinking. I mean, why settle for earning a tiny percentage from a bank when you can take direct ownership of an asset yourself? It's about moving from being a passive saver to an active owner. And that's where the real power lies. In turbulent times, there's always a flight to safety in things you can actually see and touch. Gold has always been that ultimate safe haven asset. But we're also seeing huge investments in real estate that generates income, like apartment buildings or even farmland. And don't forget art and collectibles. A rare painting or watch isn't just a luxury item anymore. It's a serious financial asset that can be worth millions. Right, so the really crucial point to get here is that this is about so much more than just chasing higher returns. Technology has advanced to the point where the wealthy can effectively become their own banks. They can invest directly, move assets across the globe in an instant, and completely bypass the slow, heavily regulated traditional system. But you can bet the old guard isn't going down without a fight. The traditional banking world sees what's happening, they see the writing on the wall, and they are scrambling to adapt to this new reality. So what are they doing? Well, banks are pouring billions into technology. They're launching their own private investment platforms to give their clients access to the very startups and crypto funds they were leaving to find elsewhere. They're rebranding simple savings accounts as exclusive wealth management services to sound more appealing. They're trying to beat the innovators at their own game. Now, one of their biggest and maybe most controversial moves is the development of central bank digital currencies, or CBDCs. This is essentially a digital dollar or euro, created and controlled by the government. The official goal is to modernize money, but it comes with a huge catch: the potential for unprecedented tracking and control over every single transaction you make. And this entire migration of wealth, it's creating a hidden but very real danger. We're starting to see the emergence of 2 parallel financial systems, one for the wealthy and well-informed who can navigate this new world, and another for everyone else who's still dependent on the old, shrinking system. This growing gap could have massive economic consequences down the line. So what's the takeaway for the rest of us? Well, the goal isn't to blindly copy the ultra-rich, but to understand their mindset. The lessons are pretty clear. Don't let your money get eaten away by inflation in a low-interest account. Diversify where you can, and most importantly, keep learning.
In this new era, financial knowledge is the ultimate asset. It's the real power. When you put it all together, the loss of trust, the rise of new assets, the banks fighting back, it's all pushing us toward a really fundamental question. What will wealth and money even look like in the 21st century? Two technologies are right at the heart of this revolution. First, you have artificial intelligence, which can now manage huge portfolios and predict market shifts faster than any human ever could. And second, you've got decentralized finance, or DeFi, which uses blockchain to build an entirely new financial system where you can borrow, lend, and invest without ever needing a bank as a middleman. This slide really gets to the core of this whole shift. The very definition of wealth is changing. It's no longer just about having money locked away in a vault. It's about having control over digital assets that you can move instantly and globally. Trust is shifting away from old institutions and toward personal control, all powered by technology. We are moving out of the era of centralized banking and into a new age of personalized finance. The future won't be built on bank branches and paper forms. It's going to be built on data, on digital systems, and on empowering individuals to take control of their own financial destiny. And so, that leaves all of us with one final, powerful question. It's a question that the wealthy have already started to answer for themselves, and it's one that will ultimately define the financial future for every single one of us.